So the elite investors that I've been tracking for over 20 years, they just cycle phone calls through every broker that exists, constantly developing relationships, checking in with them. It's not just about business, it's about personal. So that when I get my next listing, I already have 20 or 30 people I'm thinking about immediately because of the relationship we have. And if you make that your game, you'll do way more deals than everybody else per year consistently over a long career.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello, and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, we're practicing with a new system here, and it's a little frightening. Technology is frightening.
All I know is that I've got wires all over the place.
And the most important thing is I don't have to monitor your sound anymore. You have to monitor your sound.
Well, that could be an issue, but if I come back strangled after this episode, please everybody understand why.
Well, guys, you have to understand, I mean, this podcast has been running for, 8 years now, Steven, something like that? 8?
Yeah, long time.
Long time. It's been a long time. And Steven just shows up, and he's always said he shows up and looks pretty.
Yeah, that's my job.
He shows up and looks pretty, but all we have is audio. So that's how pretty he's looking on audio. But we're moving into the modern era, and we're going to have video coming out, and we're practicing with video for the first time today. And so this is a little bit of a different setup than we've had, and our face for radio is soon going to be everyone's. I think you call it a disappointment, Steven.
Exactly. It's look. I don't want to exaggerate. Just underplay it.
Anyway, we haven't talked multifamily in a while, and wanted to talk a little bit about multifamily. We've got a great guest, a broker from North Florida that does a lot. One of the larger producers of multifamily in the state of Florida. So we're excited to have him today. Steven, anything you want to talk about in regards to our guest before we roll with him?
Well, I would say as brokers, the overwhelming majority of inquiries that we field is people who want to buy multifamily. That's the biggest segment of the market. And the truth, and it's frustrating to most people because the truth of the matter is it's a little bit of a closed door. It's very hard to find properties. It's very hard to do deals. How do you get in? How do you play the game to win? And that's what I hope we'll learn a little bit about today.
Yeah, and it's not just multifamily. It's when you start moving into larger assets, it's important for agents, investors, landlords, sellers, everybody to understand fully what everybody's role is. And there's a lot of time and money and energy that's invested in getting these deals done. And if you're not prepared to execute and to show the seller that you're prepared to execute and the broker that you're prepared to execute, it's hard to get into the game. And so we're going to talk about that today. And we're going to talk a little bit about what's going on in the market, the multifamily market, with the rising interest rates and some of the other issues we have going on right now. Wanted to first, before we get into our guest, talk a little bit about reviews. If you've not left us a review, please do. It's very important for us. It's a struggle for us to produce this show. We've been doing it for a long time, and we don't want to keep going back to the same guests over and over again. So we're having to go out and solicit the program to folks who might not know who we are. And one of the first things they do is they'll go to Google or to the iTunes store and see what listeners are saying about us. And so for you to be able to leave us a review, it's important because it might be that review that you leave helps us get an additional guest. And we probably go through, I don't know, Stephen, 7 or 8 people, 9 people, just to get anybody to talk to us about being on the show. And it's tough. We want to cover all the markets. We want to have market analysis, and you guys can definitely help by just leaving us a review.
Yeah, and we, honestly, we want to be picky also about getting the right kinds of guests. And when we do find them, we want them to want to work with us and do a podcast.
Absolutely. So just one more thing onto the review. The iTunes Store is the best thing. If you can go onto the iTunes Store, for those who don't have iTunes, you can go on to Google, you can go onto our Facebook page and leave us a review. It definitely helps us, and we appreciate you for doing that. So let's go ahead. We've talked enough about this. Let's get on with our guest.
Let's roll into multifamily. Today we have with us Beau Beery. Beau has been in the commercial real estate business in Florida since 1999. He earned a bachelor's degree in marketing and a master's of science degree in real estate for the University of Florida. Beau is a commercial realtor, and he has been consistently ranked as the #1 multifamily producer in Florida for Coldwell Banker. He is regularly asked to speak at industry conferences and to private companies. He has a YouTube channel where he guides viewers on how to buy more family assets, how to sell them, and how to conduct market analysis. Beau, welcome to the Invest Florida show.
Man, it's great to be here. I'm glad we got to get together on this.
Yeah, Beau, great to finally be able to catch up with you. Why don't you give us a little bit of an idea about how you got into the real estate business and more specifically multifamily?
Yeah. So when I graduated from University of Florida with my marketing degree, I happened upon becoming a leasing agent on site at a 400-unit apartment complex because I just needed a job. I walked into the gym and saw my buddy there at the top of the stairs, and he said, "What are you doing?" I said, "Well, I just graduated. I'm looking for a job." I was studying to be a personal trainer. And he says, "Well, I work in an apartment complex, and it's new construction, and we're still building buildings, and we need someone to lease the units. You have any interest?" And I said, "Well, shoot, yeah." And it ended up being Trammell Crow Residential, which was one of the largest apartment developers in the country at the time. And they built this apartment complex here in Gainesville. And I got into leasing and loved it, became the top leasing guy within a few months. And the property manager was very cool. She would show me the books. She would show me the balance sheets, the income statements. And I was watching essentially 800 people pay for, at the time, was about a $25 million asset. And I never saw them. And I was like, this is an amazing business. Like, how in the hell does someone never show up to a $25 million asset they own and they just collect cash all day long? And so I was all in at that point. And I started asking around, like, how can I get more education on this? And the University of Florida had this graduate real estate program, which is currently, I think, top 5 in the country or top 3. They only accept 30 students from around the world. You have to have a certain GMAT score, grade point average, letters of recommendation, all that stuff. After a year of hell, I finally got in, and in the master's program, got to meet a bunch of amazing players on the board of directors. Graduated, got a job with a commercial developer based in Gainesville. Actually, they're known around the Southeast. And they develop and invest in office, retail, industrial, multifamily. So I brokered and managed their portfolio. In 2010, I had the opportunity to acquire a Coldwell Banker and a Coldwell Banker commercial. My partners ran the firm. All I did was sell multifamily. And I sold those firms back to my partners in 2020. And ever since then, I've just had my own little boutique multifamily brokerage firm. And I broker anything over 10 units, student housing, and conventional in the northern half of Florida. That's my story.
So geographically, when you say the northern half, I mean, are you going all the way up to the far north in Florida? And
yeah, I do. So Polk County, which is around Lakeland, Winter Haven area, that's my southern border. I do not broker in Orlando or Tampa because those are very institutional type markets, and that's not the kind of asset that I sell. And then I go all the way up to Tallahassee, Jacksonville, Daytona, New Smyrna, Gainesville, Ocala, Lake City, all those markets in between. and I do not do Pensacola. There's just not enough number of assets in that area for the drive.
Okay, so, all of us know that multifamily has been such a high-performing asset. It's so hard to find properties. Every day we get calls from people like trying to find deals. Give us some insight on how you think people can find deals in the multifamily market.
Sure. So it depends on the size of the asset. I mean, anything that's under 10 units and particularly under 20 units, but mostly the smaller under 10 units assets, that's usually a single family broker product, right? So the person who sells a house to someone, that person says, hey, thanks, Sally, for selling my house. I also own this quadruplex over here. You have any interest in brokering it? And so a lot of those deals get done that way. And in the under 10 unit world, a lot of those deals get done between buyers and sellers directly, right? Because the seller's it's not their full-time business. They don't understand how valuable their asset is. They don't understand they can hire a broker and get 25 offers in 2 weeks, right? So it doesn't happen as often as it does above 10 units. Above 10 units, which is the world I play in, over 90% of assets are sold by brokers, whether it's on the market through websites or it's off the market through the database and phone calls. I did a study 3 years ago where I did a 5-year study and studied 31% of every closing in my markets and determined that 93% of every sale was done by a broker. Now, the reason I say this is it's not because brokers are amazing or whatever. It's just that all we do from the time we wake up to the time we go to bed is developing relationships with the people who own these assets, right? We know what they own, what they paid for it. We know what their pain points are. We know where their equity comes from. We know how they source their debt. We know how they participate in the transaction, how they operate, how they negotiate, whether they retrade or not. We know who their relatives are. It's just all this stuff about people that we've been developing the last 20 years. Another investor can't call another investor and get that information, right? Those are the information we get because as brokers. And the other reason is because folks who own 50, 60, 200 unit assets, they don't have the time to, put something on the market, deal with all the inquiries, qualify folks. And in addition, they're not, they don't know how to create sort of a bidding multiple offer environment, right? They're going to hire the professionals that's all they do. And so the whole point of a book I wrote is that you can be an investor who spends the majority of their days and nights trying to find that needle in the haystack owner that when the buyer called that seller directly on the perfect day in their life where they would actually entertain an offer from someone they don't know anything about and actually sell it. You can try to do that kind of transaction, which happens 1 in a million, and you may get one done every 2 to 3 years. Maybe you get a few done every 2 to 3 years. Or you can make your whole game about networking with every multifamily broker that covers every market you cover, developing long-term relationships with them, and then those 50 and 60 brokers that cover all the markets that you cover are flooding you with the opportunities before they even hit a website, before they make a phone call. So the elite investors that I've been tracking for over 20 years, that's what they do. They just cycle phone calls through every broker that exists, constantly developing relationships, checking in with them. It's not just about business, it's about personal. So that when I get my next listing, I already have 20 or 30 people I'm thinking about immediately because of the relationship we have. And if you make that your game, you'll do way more deals than everybody else per year consistently over a long career.
Now, I'm sure that you're no different than us. I mean, we get calls all the time about individuals that are trying to break into the market and they, want to buy. And there's such a shortage of deals that are out there. And they, right. they'll get very frustrated because the broker is not cutting them in on the deal. So I think that's one of the biggest complaints that we get is the brokers just ignore them. So what would you tell an investor that's trying to get into the market? You've already have your book of 30, 40, 50 people that you know will buy and can execute. So what would you tell somebody who does not have that experience in this market, trying to break in, trying to get with the right broker like yourself?
Yeah, great question. So let's talk about two different investors. You got the newbie, right? Someone who doesn't own anything. Maybe they've got money. Let's say it's an attorney who makes $1 million a year. He's got a nice house, got some nice cars, wants to diversify a little bit, wants some residual income. Definitely has the capacity to buy any kind of asset on the planet. Let's say he's able to afford a 50-unit deal. You have to understand, to a broker and to a seller, why would they take a chance on a guy who owns no units, has no experience, when they have a choice among thousands of investors worth tens of millions of dollars that own thousands of units, right? The only way a newbie can gain traction, particularly in the larger apartment world, call it over 10 or 20 units, is to team up with someone who does own units, who does have experience, who has equity, who has debt relationships. It's the only way. And so when you're making those first phone calls, you never want to call up and say, hey, brand new to the apartment business, I see you've got some listings, would love to tell you my criteria. You don't want to do that. When you call a broker, you want to have already established a relationship with a mentor, with someone who has all these things. And then the phone call goes like this. Hey, Beau, heard you're a great broker in the market, that you cover the northern half of Florida. My team owns 600 units in Jacksonville and Daytona Beach. We are looking to purchase 50-plus units, market rate. We never retrade. We have done 6 deals in the last 12 months, right? So the guy calling me may not have done all those himself, but together as a team, they have experience, right? Now, if you're someone who's already experienced, let's say you own 2,000 units in California and you're looking to enter the Florida market, the best thing to do is you're going to, first of all, create a package, right? So I would make a list of all the assets you own, addresses, number of units. I'd stick in several letters of recommendation from brokers that you've done deals with and lenders, okay? Because this is a very small world. Everyone knows, especially on the lending side, knows a lot of the great lenders that are out there. On the brokerage side, we're all connected, even from state to state. We know several people across states. And then when you call up, you kind of give a little bit of your history and your background, and that's a great introduction, right? So here, hey, my name is Beery. My name is Carl. Beau, I've heard of you. Here's my background. Here's what I own. We're entering the Florida market. Here's my criteria. By the way, when we hang up, I'm going to send you my, the assets I own, my bio, what my criteria is, and that's your great first phone call. But the real work comes in by automating, using a CRM, literally a software, automating your contacts with all the brokers. So what I teach is making a list of every broker in the market you cover, every one of them, even the ones you don't like, even the ones who you think are not productive but sell an apartment complex every couple of years. You make a list of every single one of them, their contact information, any information you can find out about them, people you know together on LinkedIn, find out what their background pictures are on Facebook. You import all this information into a CRM, and then you enter in dates every 30 to 60 days to check in with these brokers on a regular basis. And so basically every day when you walk in your office, you have the math will work out to somewhere between 2 and 5 brokers you're supposed to call that day. And that day, all you're doing is calling up and just developing that relationship, right? You might talk a little bit about some personal stuff. Hey, Beau, by the way, when I was looking up your phone number, I saw you on LinkedIn. You and I know Steven together. Let me tell you a story about Steven. And then you'll talk about business. By the way, what you working on, Beau? Have you done any BOVs lately? Anything I can make an offer on? Right? And so if you can imagine, guys, every 30 to 60 days, month after month, year after year, the most elite players in this game who have been doing it for 5, 10, and 20 years, calling 60 or 70 brokers consistently every month, why they get the first crack at every deal that comes to market. versus every other investor. What they do is they call every 4 or 5 months or every 2 or 3 months. And every time they call me, they only say one thing. Hey, Beau, what you got? Hey, Beau, what you got? Hey, Beau, anything I can make an offer on? Like there's no relationship there. There's no value they're adding to my business. I'm trying to add value to them all the time, right? I'm sending them reports. I'm connecting with them. I'm emailing them information. Most investors are part of our drip marketing program. But if all you do is call every few months, every 4 or 5 months, or shoot an email or a text and say, what do you got for sale? There's nothing there, right? But the investors who are adding value to other brokers' lives and talking a little more and being consistent and methodical about it, those are the people who stay top of mind to a broker. And this is not just a broker thing. This is just the human brain. This is the way the human brain works.
Right.
So that's interesting because, most people, what they do is they just go to websites like LoopNet and cycle through all those. Of course, 100,000 people are looking at those same sites all the time. And I would bet you that most don't really bother to really call brokers. They're calling on listings that they see on sites.
Well, and just so you know, no apartment complexes are sold on websites. The ones you see on websites are already spoken for. The only time ones are put on websites is one of a couple reasons. Number one, you have a seller who might be a REIT who is composed of investors, and those investors like to see it heavily marketed. A second choice might be you might have an unsophisticated seller who thinks that because his house gets sold on MLS, that's how his apartment complex should be advertised. Those are very few and far between. Or third, the broker has already gotten lots of offers. He puts on a website to capture more leads. But I can't remember the last time I've ever put a deal on LoopNet, CoStar, apartmentbuildings.com, whatever the hell it is, and someone emailed me or called me and said, I found your apartment complex on LoopNet, and actually won the deal and bought it. Never had that happen before.
It just happened to me the first time in 12 years with one of my young brokers. It's funny because when you get guys that get started in the business, they get a lead, somebody wants to buy, and they're like giddy about it, right? Like they're so excited about this buyer lead, and you don't want to dampen their enthusiasm, but throw a big wet blanket on. They finally got someone who wants to buy, but you are like, really the bottleneck here, guys, is the deal, not the buyer. There's there's 100 or 1,000 buyers for every deal that's out there. So, so you got one, you need like 999 more buyers, but let's try to spend a little time on getting the deal. That's and investors don't understand this either. They get very, very frustrated. They just, because the brokers don't call them back. And if you don't have that resume, why would they? Why? Because the broker doesn't want to bring forth a deal to one of their respected clients they have a relationship with someone they've never transacted with. The risk is too high.
Right. I mean, a broker wants to do multiple deals with that seller. The greatest thing I can do is when I choose the right buyer and it goes smoothly, the first thing I want to do at that transaction is, hey, Mr. Seller, wasn't that transaction with Steven great, the buyer? You own so-and-so apartments over in Daytona Beach. I know it's not for sale. Let's put it underneath his nose and see what he pays. Maybe he'll pay another good price. All right, Beau, actually, I liked working with Steven. He's a good buyer. Go for it, right? But, if I just chose someone I didn't know, I have no experience with, and I just wanted to give them a shot, and they don't perform, I'm toast. I'm first of all, I'm probably going to get fired. Secondly, I'm never going to be able to do a second transaction with that seller. My reputation's wounded. I look bad to the buyer and the seller. And by the way, it's not just the buyer and seller who watches that, right? It's the seller's property managers who talk. It's their leasing agents, his attorney, the title, the phase one guy, the buyer's attorneys. There's lots of parties who are watching those who are involved, and you can either kill your reputation with 16 people or you can boost it. And it doesn't take long before you do 4 or 5 deals incorrectly before you become that guy.
Yeah.
Right? So it's uber important to every broker to choose the right buyer. That's why no deals are done on website. They're done from our database. And our database is composed of investors who we have labeled in our system by certain rankings. Every broker does it differently, but for me, I rank every investor A, B, or C, right? So that as my interactions go on each day, I'm sort of recalibrating. So when I get a listing, some of the first folks I'm going to are my rank A customers. And not because I like them more, it's a combination of, yeah, I like them, that's important, but they perform. They pay the best price, they have short due diligence periods, they're going to make my seller happy, and we're going to get a deal done.
So retrading deals has to fall on that list of getting knocked down from an A to a B to a C. When someone retrade, and sometimes retrading is okay. Like if somebody comes in and says, "Look, I'm making this bid. It's sight unseen," and then there's some really serious things that came up that probably should have been disclosed and weren't. But where does that rank for you? Somebody retrades a deal. In other words, they come to contract at $10 million, and then they come back a month and 6 weeks to really, it's the worst part is the day before due diligence ends, and says, "We're not going to pay $10 million. They're going to pay we're going to pay $925,000 because there's $750,000 we found in stuff that we didn't know about."
Right. So to answer your question, retrading to me is a math equation. So if you, in that same case, if you had a $10 million asset, and let's say there were 6 offers, Joe Schmo won the deal, he's under contract, gets into due diligence and finds $100,000 issue, whatever it was, whether, let's just say it was something that the seller couldn't have even known. The broker couldn't have known, maybe a pipe burst or a title. I don't know what it is, right? Not title, because title has to be cleared, but whatever it was, there's a $100,000 issue. Okay. If you create a pro forma and you're paying now $10.1 million instead of $10 million, and you've got 6 other buyers who are hoping you back out, if you come to me as the broker wanting to retrade $100,000 on $10 million, I'm not liking that, because I know on an IRR that did not move your IRR even 1%. Mm-hmm. And it barely touched your cash on cash. I've done this. I've plugged it into pro formas in every which way or possible. If you're paying 10.1 versus $10 million, and that makes the decision on whether or not you buy this, then you should have never bought that property in the first place, because $100,000 is nothing. So my retrading answer to you is, as a buyer, if you're faced in a situation, it depends on the market dynamics at the time. Let's just say we're in a fairly hot market, and there's 6 buyers waiting in balance behind you, and a $100,000 issue comes up, and it changes your IRR from 20% to 19.1. Do you really want to risk, more importantly, your reputation, going back to that broker who's never going to send you another deal again for something so silly, that seller who's never going to do a deal with you again, so that you can earn 0.9 extra points, right? Now, if it's a 3 or 4% different on IRR, that might make a difference. It just depends on the situation. At the same token, if it's a dog crap property that's, it was you and one other guy competing against it, it's in a C minus location, high crime, blah, 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 it gives you a little more room, a little more capacity. If you feel like the seller doesn't have any other alternatives, you can play a little more hardball. But it's just a math equation. Now, going back to your one about retrading in the last couple of days before due diligence, I don't care how good your excuse is, unless you found that issue out literally in those last 2 days, you never want to do that, because that's just crass. If you've known all along of a certain thing that you just brought up in the last 48 hours before that, that just does nothing but piss off a seller. And if you're a buyer listening to this, just put the seller hat on and tell me how you feel when I come to you 48 hours before due diligence and you and your wife and your partners are already talking about how you're going to spend the money. And I say, you know what? He just retraded. It doesn't feel good, right?
Well, it's a game, to some it's a game or it's a blood sport.
To some it's a game. It's just the last deal they did with me.
Yeah, and they're very transactional in nature.
And by the way, I'm calling 7 other brokers and telling them about what the guy just did.
Yeah, it's transactional in nature then, and if you want to just burn that bridge, go ahead, be my guest.
Right.
So let's just talk about another topic, because we've been in a totally different kind of market now. There's been such low supply and such high demand, and just the way we look at properties are different now, and the yields that we expect are different. So talk to us a little bit about how to do market analytics.
Sure. To me, there's no better way to know the market like the back of your hand. And I'm going to tell you how, but most investors are not going to have this time. It's going to come back to having the relationship with the broker who does. But the reason I know my market so well is many years ago, I exported every single asset from every single county tax assessor website. I spent months and months assembling the data by every characteristic you can think of. Year, type of construction, ranking, what it sold for, when it sold for last, who owns it, number of units, bedrooms. We're talking somewhere between 25 and 27 columns on a spreadsheet, if you can think of that. I then import all those assets into a CRM that allows me to basically crunch numbers in all kinds of ways. And then every 2 weeks, we track and verify every single qualified sale, update our records, and we track all these sales on spreadsheets. So, in other words, I can tell you trajectories of deals, what they sell for, gross rent multiples, cap rates, dollar per unit, what the rents were at the time of sale, how many sold last month, how many sold this month, how many are going to be closing next week. How many new constructions are under construction, how many are proposed but not yet gone to construction. And so, the inventory to me, having every single asset that could ever trade in a database tracked and updated on a daily basis, and then sales every 2 weeks, it's the only way to know the markets like the back of your hand. And for investors, there's just not that's a lot of time. It's what I do a majority of the day. The best thing they can do is just be in contact with the brokers who do have that data and checking with them. That's the analytics part. You should be able to lean on your broker and say, hey, Beau, we're looking at so-and-so asset over in Daytona Beach. If you wouldn't mind, what can you tell me about this kind of asset, or the sales prices, or, this is around a B- asset and the rents are this, is that in range? How many 1-bedrooms exist in this market? All that analytical data, the only way is to have it from the tax assessor websites. Now, a lot of people use CoStar and Reis and Reonomy, and those are good if you're not in a show me state, right? There are very few states that don't have open tax assessor websites where you can download information or call tax assessors directly and have them email it to you, or you can buy from them. If you're in one of those states, then you have to rely on the paid websites. But those websites, you have to understand that the data is entered in by 20-year-old people who don't do real estate. So they'll get units wrong. They'll mix up market and student housing. They have wrong contact information. They have wrong qualified sales. There's a lot of flawed data in there.
So when you're doing your data, you're actually, something doesn't jive, you're picking up the phone and calling folks, I suppose, and say, what really happened here? It doesn't really make sense.
When I need to, because I track big data, and what I mean by big data is because my database is so big and has so many years of transactional data, I'm now able to, I know exactly what something should sell for. So when I see, 350 units built in 1974 in a C+ area of Jacksonville closed, and it closed for $125,000 a unit, I know right off the bat, all right, that's a qualified sale. I know that's legit. That's real. Blah blah blah. When something that is new construction sells for $225 a door, call it in Tallahassee, I know that ain't right, because everything is late 200s to early 300s a door, and that ain't right. So then I'll know who the broker was that sold it, or I'll know the buyer and seller because I looked it up through the SunBiz websites. And I'll call them up and say, hey, George, listen, I just saw that you bought so-and-so. No way in hell you got it for that price. So what happened? Oh, Beau, well, we called so-and-so and we broke out tangible from intangible before we closed. And so what's showing is just the tangible taxes. Okay, that makes sense. Right? And then I'll obtain the actual sale price in their books from them. I won't advertise it, okay, so that it doesn't mess them up, and I'll just have it in my internal records. But yes, we verify everything so that my data is super quality. So when someone calls me up, to have a BO, if they want to have a BOV done, I can tell them on the phone within a pretty close margin what it's worth just because I track so many sales comps. Right? Like I can give them the DNA of 30 sales comps that are very much like theirs and what they sold for. And then, of course, I'll obtain their rent rolls and financials and run a concrete point. But on the phone, I can give them a range because I track all the data.
Shifting topics on you a little bit here, Beau. We're in an inflationary environment right now. Obviously, interest rates are ratcheting up. Why don't you talk to us a little bit about what's going on in the market, what you see, and what's your outlook for the next, say, 18 months?
Yep. Okay. So, call it 50 plus units and probably more so 75 plus units is completely dead on the number of assets coming for sale, right? And I mean like dead. I just ran the sales. Only 6 sales over 10 units of conventional student and affordable housing combined occurred in the month of September for all my markets in the northern half of Florida. 6. Okay. And that's probably going to be in that range for the remainder of the year. I mean, just very few number of sales. Why? Well, because owners of assets are earning higher NOIs than they've ever earned in their entire lives. So why would they come to market and sell at 6% and 6.25% interest rates from a buyer's borrowing capacity, right? Doesn't make sense for them. What I think will happen is, and by the way, the sellers understand the market. It's not like they're, pay it or not. I mean, they understand sellers are also buyers, right? I mean, we're all the same people. They just, it doesn't make sense for them to come to market unless they've got major value add left in their asset and price it at just at today's interest rates. And so they're going to hold on to it. I think that the price they want to sell at, that they wish they could sell at today, I don't think they'll be increasing it. I think they have a price in mind that they would sell for, and they're just going to have to wait until their rents continue to increase to a point at which in the future, given the interest rate at that time, now makes sense to sell, if that makes any sense, right? So in other words, in May of 2022, if they wanted $20 million and the interest rates were 4.5% right there, they may still take $20 million. It just may be middle of 2023 or end of 2023, so that it's another year of 10% increases on the rents before, given a 6% interest rate, they can now sell at $20 million. Right?
Yep, makes sense.
That's what I think is going to happen. And I just ran a poll on LinkedIn. Since I'm connected to a bunch of followers, I can run good polls with with enough data points to make sense. And I asked everybody, when do they think the first interest rate decrease will occur? 40% said it will occur in the second half of 2023, and 28% said it will occur in the first half of 2024. Another 16% said it would happen between now and the end of the year, which they're crazy. It's not happening. We know it's going up another point in the quarter.
Yeah.
And another 16% said it would take until after June of 2024. But the bulk of folks thought it was going to happen somewhere between June of 2023 and call it June of 2024.
Interesting.
Now, I believe that's the case because of it's an election year. I think as we near elections, Democrats and Republicans want to show wins, right? And the way you do that is lower interest rates. And I think there will be a very active selling environment when that first one occurs.
It's interesting, Beau. I don't want to get too much into the punditry side because it ultimately, Stephen and I, when we put stuff on record, it's almost always wrong. So I don't really want to go down that path too much. But what are you thinking? What are you thinking is going to happen? And do you think the Fed? There's conflicting data, but do you think the Fed's already gone too far, or do you think they've not gone far enough?
I would prefer that they not do any additional increases the balance of this year. I think that they've done so many so fast that what I've experienced in my little niche is a complete halt, and that they've accomplished what they've needed to. And every human being I talk to, whether they're in multifamily or not, has felt, even if they're not in real estate, has felt a total slowdown. So I believe it's been accomplished. I would like to see them chill for another 6 months before they just arbitrarily raise interest rates. I believe what the 40% believe, which is that we'll have our first decrease towards the end of next year. I think it's going to be slow as hell in terms of number of sales between now and then.
Yeah, they react with lagging indicators, don't they, the Fed? And so this is the issue with me. I look at it and go, I'm a little concerned that they're just killing this thing, and there's going to be really nasty on the back end. And if you get another round of hikes before the end of the year, all you're going to do is just drive the car off the cliff, and that's what concerns me.
Yeah. Well, and after I think the second or third increase, I could see, and I track smaller assets as well, and I could see that even though all real estate is affected by interest rate increases, obviously the larger the property, the larger the value, the more painful it is. Conversely, smaller assets, under 20 units, under 40 units, while it's still the same effect, the actual dollar value pain is not that much. And so I was like, well, shoot, let me, just out of curiosity, let me run an exercise. And so in Gainesville only, I pulled all of the under 10 unit sales, duplexes, triplexes, quadruplexes, eightplexes, just for fun to look at it. And the number of sales have skyrocketed. I mean, and it continues to go way up, even despite the interest rates. And it's because it's just not that much of an effect from a dollar value perspective. On a $20 million deal, that could be $3 million, right? On a $400,000 quadruplex, maybe it's $30,000. And the doctor's not going to not buy the quadruplex over $30,000, right? He's looking for a long-term retirement. And so we also found that there was 5.1 times more under 10 unit sales than over 10 unit sales in the Gainesville market. And we're going to start studying some of the other ones, but we're already seeing a flight to smaller assets. Now that doesn't mean the 200 unit guy is buying 20 unit assets, but those in between folks who traditionally bought 50 to 150 units, who have the ability to, when they own a 75 unit deal over in Lakeland, yeah, shit, I'll add a 10 or 20 unit deal if it's down the road and just kind of run it out of my office there, right? So those sales are still, they're not skyrocketing. They're still down on the smaller number of sales, but they're doing a hell of a lot better than the bigger sales.
Understood. Awesome. Stephen, if anything, Beau's been really great today, talking to us about the market. Is there anything else we want? I know we got to get wrapping up with him, but is there anything else you want to ask him before we let him go?
Yeah, well, Beau, what we'd like to ask you is, this has been fascinating, and if people want to reach you to talk about deals or learn a little bit about the market, how can they reach you?
Sure, 3 ways. Number one, my website is beaubeery.com, BeauBeery.com. Whether you buy in Florida or not, it doesn't matter. If you go to my website, there's a bunch of incredible stats on the markets I cover. And the reason you want to look at those, whether you buy in Florida or not, is because those are the kind of stats that you need to master for your markets so that you can react to opportunities quickly when brokers bring them to you, right, or sellers. The second way is I have a YouTube channel called Beau Knows Multifamily, BEAU, Beau Knows Multifamily. I've got playlists on there for advanced level investors, beginning investors, market analytics. Sometimes I post new listings on there before anybody else sees them. And then the third way is you got to get my book, right? So I sold everyone's got a book, right? But But my book is an inside look at how the most elite investors have transacted and built a huge portfolio over 20 years. And it's nothing like any other book you've read, right? All the multifamily books out there about how to calculate NOI and how to manage better, how to find debt, how to syndicate. This is an inside look at how it's actually done, how sellers and brokers talk about buyers, how you build a reputation in the marketplace so that, you know, brokers are flooding you with deals rather than you having to find and chase deals. It's called Multifamily Investors Who Dominate. It's on Amazon, it's on Kindle, and it's on Audible.
Yeah, I mean, everybody's got a book. Even my partner Steven here's got a book. The problem with it's not very good. It's, he sometimes the crayons go outside of the lines. It's it's not very attractive. But it's been a pleasure, man.
Well, I appreciate you guys having me on the show.
Hey, Beau, thanks very much.
You bet. I appreciate it. Thanks for having me on the show.
And that was Beau Beery talking multifamily in the northern part of Florida. And it was great conversation with Beau. Happy we finally had an opportunity to speak to him. Stephen, what were your thoughts?
So Beau's really interesting because he has boots on the ground, and you know we live in a large city, Tampa, and the markets act differently in the larger markets, Tampa, Miami, Jacksonville, and Beau's chasing the assets and working. He knows the market that's very accessible to most people. He just looks at it from a different perspective, and he's got a lot of data to work with, and he mines the data, so he knows what he's talking about, and he knows where to look for things.
Yeah, Beau's definitely a guy you want to hook up with if you're doing multifamily in north of Lakeland. So everything that's his southern territory and all the way up to Jacksonville, and he does some work with people that are out of state too. So, you know, Beau was a great guest. Steve, we have had a lot of great guests over the years, 8+ years. Where can folks find that information?
So we have an impressive library now, and the place to go is www.investfloridashow.com. Also download the app so you can listen to the podcasts while you're mobile.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Steven Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.